pre-election interim budget on 1st February may not see any major policy initiatives as big-ticket announcements are expected later in July after the new government is elected to power, analysts say. The overall capex spending for FY25 is also expected to moderate, with economists pegging total allocation at around 11 trillion rupees, only 10% higher than the 10 trillion rupees budgeted for the current fiscal. This was notably an increase of 37% against the budgeted allocation in FY23. However, despite the moderation, analysts expect infrastructure pockets like railway, capital goods and construction to remain priority areas, which will likely see increased outlay.
Sectors which look good to play for the budget include capital goods companies, essentially machinery supplier for infrastructure developers. Apart from that, construction companies should also do well, and railway contracting companies should also do well. The only problem with some of these names, especially in the railways and the defense sector, is that the valuations have run up ahead of fundamentals. But there are enough island of sanity in terms of valuation in the capital goods space and the construction space, which one can play for the upcoming budget.
Notably, select stocks in the rail and defense sectors like RVNL, Bharat Dynamics, BEML, Titagarh, Bharat Forge, and Astra Micro have rallied 18 to 91% in the last 3 months, valued at 1-year trailing multiples of as much as 85 times. Meanwhile, rural and agri support is expected to garner the most attention after infrastructure. Food and fertilizer subsidies will be eyed given the lackluster rural demand.
Rural economy and the lower income segments demand seems to be still weak. So versus capital expenditure, I would expect a little more focus on the rural economy, some more subsidies or some packages for the rural and the lower income segments. Insurance scheme for the farmers, the crop insurance, health schemes, food subsidy schemes will actually be continued and maybe even taken further. So I would say that companies in these segments, catering to these segments, should actually outperform if we see some significant announcement.
Development schemes including Manrega and PM Kisan are also expected to see higher outlay to boost rural consumption as per analysts. Those at Sheikh Khan expect this to augur well for consumer staple companies and two-wheelers. Their top picks in the rural focus theme include Hero Moto, M&M, Escorts, Hindustan Unilever, ITC and Dabur India. Thus, analysts suggest keeping a stock-specific view within the rural and infrastructure themes to make the most of the budget support for these sectors. Today, on 31st January, Q3 earnings of Bank of Baroda, Ambuja Cements, Dabur and Godrej Consumer, among others, will be on investors' radar.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.